Good morning, everyone. It's Heather here in Trading Rebels. It is Tuesday, April 26th. We have a very stormy day here where I am, just making me a little lagging. Yep, a little dreary and the sound of the rain. I have the window open. Oh my goodness. You're lucky I'm awake right now. All right, so let's take a look here at the S&P futures and what's going on in the market. So I probably have a bit of a contrarian view to some people. People are constantly trying to explain to me why I'm wrong, and I might be. It's fine. The market will do what it wants to do. It doesn't care what analyst calls what out on it. But there are some important things that I think that we need to take note of here in the S&P and constantly comparing it to the pandemic lows. So, and I've always thought this, I've always said this, that the pandemic, when that hit, we had a very strong economy going into it. And with that, I'm going to throw this up on a weekly chart. So here's the pandemic, right? This is the pandemic lows. We went down in the SPY to 218. I'd like to point out that yesterday we closed at 428.51, so nearly doubled. Here's when we came into this, we had an awful lot of strong growth coming into this. We hit the pandemic, and here's why this and what's happening here is very different. This happened to us, right? We had a healthy and robust labor market. We had a great GDP. A lot of things going very well in our favor, a strong, overall strong market. The pandemic came to us, and that is what caused this, right? It wasn't because we had a failed economic policy. It wasn't because we had incredibly high unemployment. It wasn't because we had a housing bubble burst. It wasn't because the tech bubble or too big to fail, right? Any of that didn't happen here. This was a pandemic. We crawled our way out of it back to where we were at the highs here. So at the I remember like cheering on that SPY 300, and here we were. We came all the way back up to those 345 area, right? In less than a year, right? We just climbed our way right out of it. Took a little hiccup here, all with right around the previous highs, and then what did we do? We marched our pretty little butts right up this mountain. Whew, took a little break here, came up, and now we're all choppy. So is this a real surprise that maybe we're taking a little bit of a break? Nope, not at all. But now we actually do have some other underpinning issues. Did the Fed wait too long to raise interest rates? Probably. But can we do anything about that now? No, we can't. I don't have a time machine. If anyone does, that would be really great. But we don't have a time machine to go back and say, okay, you know what? Maybe we should have started working the QT versus the QE. The Fed, the government flooded so much more money into the market, and that quantitative easing, the bond buybacks, those are kind of things that I looked at when we started coming out of the pandemic, that maybe those were things that we should start tightening up on. But the Fed was very afraid to spook the markets and make any waves, and understandably too, even though that's not their job. But now we have supply chain issues and transportation issues. We can't get stuff to where it needs to be, creating very low supply, but we still have strong demand. So a little bit of an interesting twist to all this is our labor market. We have an incredibly robust labor market. There are 1.8 jobs open for every one person looking for a job. How is it that people don't have jobs? Well, they aren't going to the one that they don't want, right? So even though those jobs are open, they aren't the ones they want. Whatever reason, if you need a job, get a job, take a job. It can be temporary. But that's what we have going into this. Wages have increased on a pretty decent pace, but now we have all this inflation, and it is like a tax on everybody. That's exactly what it is. So now this market congestion, this market kind of chaos is our fault, right? This isn't just the pandemic doing it to us. That being said, we are seeing massive shutdowns and lockdowns rather in China. And how does that affect us? Well, if you look out of their ports, there are, I mean, it is truly a sea of ships waiting, cargo ships, right? Coming in, getting out, trying to get those goods. People aren't allowed to work. They aren't allowed to leave their apartment. I mean, it is a hot flipping mess. And that is causing even more constrained supply, which then the trickle down effect, right? You one little drop hit water, that those ripples continue to go out, and that's what everybody's feeling. Well, then let's layer on top of that the issues with the Russia invasion of Ukraine, right? So we have that to deal with now. We're having energy issues, in particular, very, very difficult for Europe because they are so energy dependent on Russia. Ukraine is a huge producer of grains, right? So now we're starting to see inflation from food shortages, right? We cannot get the amount of raw material, whether that be anything from the agricultural side, right? Because not just the product, right? Not just the wheat that goes into, making that loaf of bread or whatever. So it's not just that, but from Russia in particular, we get a lot of agricultural fertilizers and things like that. So that too is now weighing on the markets. It is a lot. There's a lot of pressures. Now, for all that being said, we're not doing that bad. It's hard to remember that when we trade day to day, simply because we're like, oh my gosh, we lost 600 points, 800 points in a day. We come right back around. Yesterday was nearly a 600 point swing from where we were. So what kind of sparked that off? I do find this a little interesting. We had the initial pull down yesterday, and I'm going to go ahead and pull this up on a 1 day 5 minute chart. So we pulled down, we opened up down, we pulled down a little bit, and then we just kind of got stuck in this really tight range. And then the news started trickling out that the Twitter deal was looking like they were going to announce it. We talked about that in the morning. They said that it was coming, that they thought it was coming. I told you it would be out before the market closed, and there it was. And then this is what we did, right? We just went along. In fact, I wasn't even in front of my desk when Twitter got halted, and I was actually in those shares. That happened here. These was announced up here at midday, right? So they did it during the day, and I know there's a lot of people that aren't happy about that. Well, you know what? Who cares? It's already done. You can be unhappy about it, but choose to look and see what this can do forward. A little side note here, one question that I get asked a lot is, now what? What do we do with Twitter now? Well, the purchase price that was agreed to is $54.20. So if you're in Twitter at below $54.20 and you wanna just hold it and wait to the completion of the deal, you'll get $54.20. Here's the thing: is there a risk with that? Absolutely, it's not risk free because the deal isn't done. So they made a deal. They said, okay, the Twitter board unanimously said they will take this win. They will, and this buyout, they'll agree to it. But now is all the legal side, all the red tape. So, they put all of the ingredients in to that sausage factory. We don't want to see what happens now, but we'll wait till it comes out in a pretty little package, right? We don't like to see all of the deal making, but it's going to go through scrutiny. There's still more that has to be done. It's not 100% done. I saw people last night saying there's no way it's going to go through, and that Elon's just going to turn around and walk away from it. Will he? I don't know. Maybe. I tried calling him last night. He didn't answer my phone. I don't know. Do I think so? Do I think he will? I lean on the no, I don't think that he's going to side. I think he's going to go through with this. This is he has some very clear objectives. How is it going to be run? What is it going to look like? We don't know. We know it will be private, but if you hold on, you will get that $54.20 if it does in fact go through, and I think it will. That being said, I've seen some stranger things happen. Okay, so if you're in Twitter, that's kind of what it's looking like. I actually am still in Twitter here. They do report, and the report is not looking like it's probably going to be great. So that's something to think about. I'll probably hop out of Twitter here today before that earnings report. And then if it's still, something viable, I'll come back in and then hold on to it. There are some other really nice charts here. J&J, we talked about this one yesterday. Really like this nice little pullback to the 8. Pushed on, and looks like we may go ahead and continue this morning. Tons of earnings out this week. Crazy amount of earnings out this week. Microsoft set to report this evening. We saw a lot of these reversal plays come into, play out yesterday because the whole market, right? Rising tide raises all ships. So we saw a lot of that. Tesla taking a nice little move back up here this morning. We saw, right? Yeah. So Tesla's green this morning. Still looking good. Nice little U-turn there. We've been talking about this use of the fib line. We've used that like 5-6 times here. So that is a pretty decent look as well. We saw U-turns, right? We came down, tapped the 200 yesterday, and Apple pushed right back up. They reported at the end of the week. So here's kind of how I go think about this week. It's hard to swing trade maybe. Simply, unless you're playing like an ETF, you can always look at an ETF and decide whether or not that's worth holding. But that will protect you from if one chip is reporting, another chip may get hit a little bit, they'll move with it. So that could be good or bad, right? Consumer staples took a nice little break. Look at these, like Target looking pretty good here this morning on a reversal. Walmart, this is really crazy action in Walmart. And I say crazy just because I'm not used to seeing them so bullish, but Walmart looking really nice here. Tapped the 20, pushed right back up with some decent volume. We talked about McDonald's late last week. We'll take a look here. These two, a lot of these charts. So what are we looking for this morning? And I don't care which chart it is. If we had this reversal play come in, look now today for the continuation. We are looking to open up red here, about 135 down. So we're off the lows from the overnight. But what we want now is to see, can we come in, push through yesterday's highs, and that would be the play, an opening range break or a move above yesterday's highs. Sometimes when it's this close, the high versus the close, you could take it above the close. That's perfectly okay. Obviously, I can't tell you how to trade, but these are things that I would look for. I would also look for the volatility to drain out there in the first half hour. We're still seeing, you can see over here the news, there's a lot being talked about with Ukraine. Of course, China is, everybody is talking about China and those shutdowns, so we do have a lot going into it. So I'll just be day trading today, looking for maybe another play on the Qs, and how I played it yesterday was with the TQQQ. So I will look for continuation of that. If that hourly candle matches up, I want to see the hourly candle matching up with whatever play I'm looking to get into to give me that confirmation. So keep that in mind. That's how I'm playing it. A little bit more conservative. If we decide to start going the other way and continue this drive down, I'll look at the SQQQ. We can see Bitcoin hanging in here just above that $40,000. That's a pretty big level for a lot of people. So the, kind of watch that level, see if we can hold it and then continue to move on. So a lot of decent plays. If you have any questions, please reach out. HeatherC@GivenTreeTrading.com. Remember, the chart doesn't care what you want it to say or what you want it to do. Just pay attention to what it's telling you. It will tell you where it's going to go. All right, I hope you have a fantastic day.